Welcome back to Sportsmanlike Conduct Podcast. I'm your host, Cassius Clee.
Yo, I'm the co-host today, Uncle O, a.k.a. Business O for today. I got the glasses and the hat today.
Do you?
Yeah. Trying to look professional, man.
Oh, yeah, you understand, bro. I understand. Today, we are going to talk about financial literacy. I have our two guests here, Javier Guzman and Malcolm Howard. How you guys doing?
Phenomenal.
Doing
Glad
great,
to
man.
be here.
Appreciate
Clap it
having
up,
us.
yo.
Right. You guys are licensed financial professionals.
Yes, sir.
That's right.
I'm happy to have you here. And the reason you guys are here is because when my mom was going through her chemo, right? The question I asked her was, do you have life insurance? She said, yes. But she said it had expired. And so the policy changed to a lesser amount. So I immediately called you. I had you on speaker. It was one of those sad days, right? But I said, the question I asked you was, does life insurance expire? You said, yes, it does. And I did not know that. So this is why I want to have this conversation to let people know about financial literacy, what they should know, what they should do, and what are their options. Because we're talking about, let's say, $1 million policy that went to $100,000 policy, which if you're not paying attention, these things could happen and your insurance could lapse. Once someone's deceased and they think there's life insurance there, there's actually nothing there. Like a lot of times we're here, we talk about games and sports and fun, right? But today we're going to talk about the money game, right? Finances. How do we secure our future financially?
Kids' future.
Yeah, so I want to talk about the importance of life insurance, the different types, whole life and term. And we're going to talk about investments and retirement. And one of the main ones we want to talk about is Roth IRAs. But I want to let you gentlemen introduce yourself. Javier,
I appreciate it. Thank you for having us.
No problem.
My name is Javier Guzman. I've been in the financial industry for over 15 years total. Full-time, 12 years. I went to school for finance, a bachelor's, master's degree. And the truth is, the reason why I got into this industry is because no one's ever sat down with my mom or my grandparents to have these conversations, right? And I had a uncle pass away, late 30s, and we thought he had life insurance through his job. And, you know, that's a different category I learned afterwards. You know, most people, when we need life insurance or we need money for burial, we do a collection. Now it's GoFundMe. But these conversations about finance and money was never had in my household. And when I was introduced to this, it was really to learn it for myself. And long story short, I'm here doing this years later. I transitioned full time. And, you know, I've helped people in the community. And, you know, that's how I've been able to, you know, make this a career. So that's where I'm at now.
Thank you.
So my name is Malcolm T. Howard. I have about 10 or 11 years of experience. I got started when I was 18 years old. I really got into space because I kind of the same reason. I wanted to help my family, teach them a few concepts that could help them. We didn't really grow up having, you know, everything. So I felt like I needed to educate myself so that I could not only put myself in a better situation, but also help my family do the same thing.
All right. Thanks, Malcolm. One of the questions I have for you, what is a licensed financial professional? What do you guys do?
So that's a good question. So there's a lot of different roles within finance. A lot of times when you hear the term financial professional, usually there is more of someone who's talking mainly about long-term investments, retirement, and life insurance. So it's usually somebody who has licenses. They have to be licensed in the area of life insurance, as well as like long-term investments to set up like IRAs, 401ks, things like that.
Yeah, I want to elaborate on that. So being licensed, right? It's a state or federal license, right?
Yeah.
And I know that there's a lot of experts, quote unquote experts out there, that they give financial advice, right? And they say they're financial professionals, but they're not licensed, right? Approved, stamped, certified, right?
Yeah.
So there's a big difference between that. And this is where, unfortunately, social media platforms is very misleading, right? And this is why we want to clarify things and teach and educate and really like read paperwork with families, elaborate on this. Because these topics are very overwhelming for the average person, right? So being licensed is a big deal. You know, we went through certain background checks and certifications and
a lot of reading.
A lot of reading and studying. and exams taken. You got to get, you got to renew your licenses, right? So we have to have a fiduciary a role when we sit down with families. And what that means, being a fiduciary, you basically have to sit down with families and educate and give advice for the benefit of them, not for us, right? So, and there's a lot of things going on out there. So that's where we want to clarify who's a licensed professional in this industry.
Right. Yeah, I think that's a very important distinction.
So, all right, now you got my attention. Now, I mean, now I'm a person. You got my attention. So now, what should I look for now in a financial professional to?
So one thing, it's like you were saying, license. They should be licensed in the areas that they're talking.
They have to be licensed?
Yeah, legally they should be licensed.
Definitely.
It's important.
Sure,
Definitely.
It can't be your Uncle Tony.
Yeah, man. Nah,
I mean, listen, if you want to listen to your Uncle Tony, then listen to your Uncle Tony. But if your Uncle Tony's not licensed, he doesn't have an experience in the industry, you probably don't want to take advice from him.
yeah, but he watches TV.
Yeah.
No,
That's
not
not
happening.
gonna.
All
Nah,
right.
I wouldn't recommend it. But yeah, so they should have a licenses. They should have some experience. They shouldn't be trying to just sell you stuff.
Yeah.
Like a lot of times people find out that we do like life insurance. They'll ask, oh, how much would it cost for like a $500,000 policy? And it's easy to just give them numbers and give them prices. But we need to actually sit down with the family and actually figure out, okay, where you at currently financially and what is it that you're looking to do. That way we can properly recommend the right things. So they should be focused on making like needs-based recommendations.
Absolutely.
Yeah.
Maybe I don't know what I need.
Maybe you don't know what you need.
Yeah, man. Just
Yeah, term, whole life. What are the
or-
differences?
Yeah, what's
yeah.
the difference?
I mean, so first, what we do is we do a financial needs analysis. So the analysis breaks down your income, your debts, how much money you already have saved, stuff like that. And through that, we ask questions like, okay, well, where do you see yourself in retirement? How do you want to live? What do you want your income to be? So we have to ask a lot of questions to help you figure out what it is that you
All
want.
right, so let's start from the base. So what if I have none of that stuff? I mean, I have a job, of course.
Yeah.
But I have nothing saved.
Nothing? Okay.
Nothing saved, and I don't know what I want to do when I just want to not work when I retire.
Okay. Everybody does, right?
Yeah, that's the main thing. I could retire from a job,
Yeah.
but then I have to go be a greeter at Walmart, Target, or
Yeah,
something. You
actually,
know what I'm saying? Yo, it
it's pretty
happens.
common,
Okay.
actually.
But
That's-
it's-
Yeah,
that happens
it
a lot.
happens.
That happens a
When
lot.
I retire, I just want to retire. I don't want to do anything.
Yeah. I mean,
So the first step is to find out where your goals are, right? I mean, wherever you're working at, you can start somewhere, right?
Yeah.
That's what we trying to communicate or pass that on to our community, right? That it doesn't matter where you work at, what career path you have, you can start somewhere, right? And simply having the conversation and helping you understand that you have to develop better financial habits. And by asking those questions, we can identify what your financial habits are, right? And assessing, okay, so if you make a certain amount of money, what are your expenses, right? What do you pay for rent? We gather all that information to figure out, okay, where you at right now? And depending on your goals, we can kind of navigate which way to go depending on those questions, depending on what your goals and what you're looking to accomplish. So if you don't know anything about finance, you never had anybody sit down with you, we're the most perfect person to sit down with because our job is to say, okay, let me see where you at. Let me ask, there's certain questionnaires and questions we have already written down that we can just go one by one with you and do it together, right? So it's that's the first step. So when you go into actually recommending term or whole life, now you go into the life insurance topic. So that's too broad, right? We can't go to that topic yet because it's kind of finding out where you at, right?
Right.
I can't give you a recommendation, not even knowing who you are.
yeah.
Right? You asking me term or whole, I'm like, okay, who are you? Like, I mean, I can say both, but we don't know, right?
Yeah.
Yeah, but there's this debate, term or whole life. When I met you, I had a whole life policy.
Yeah.
You told me get rid of the whole life policy and get term based on my financial situation, right? So why would you choose term over whole life or vice versa?
So, great question. This is the biggest debate
Yes.
in the insurance industry.
Yeah,
right?
I'm writing this down too.
And you'll see a lot of social media posts. I get them all the time, messages. And the industry has confused our community, right? Because all these representatives make it sound good, but when you read the paperwork, it says something different, right? So it goes back to first figuring out what you need, assessing your situation, right? Now, what I would say, it's my personal opinion, when it comes to the type of life insurance you should get, will be term, simply because you can also invest separately, right? Now, the biggest difference between the two is that whole life insurance has an insurance component and it has a savings component bundled together, right? Term insurance is just insurance, pure insurance. Now, I can elaborate on that, right? So if we ask you the question, what is health insurance? What type of health insurance is health insurance? Would you answer that question? What would you say?
Insurance that covers your doctors.
Covers your doctors, but health insurance is term insurance.
Yeah.
Right? Because there's every year you got to do enrollment. There's an enrollment period, right?
Got you.
When you think about car insurance, what is car insurance? Car insurance is term insurance. It's either for a 6-month term or a 1-year term. And then when you have to renew your car insurance policy, what do? You renew it.
Yep.
Those premiums that you were paying the last 6 months or 12 months, do you get that refunded to you?
No.
Everyone knows that, right? Everyone knows that. You pay car insurance just in case I get into a car accident, God forbid, right?
Right.
But now you don't, and they don't give you anything.
They don't
back.
give you anything back, and everyone's okay with that,
Yeah.
right? So one question I get a lot is, I've been paying for life insurance, and then what happens after a certain time? Do I get that money back? Well,
Right,
that's
yeah.
how the insurance industry in general works. Health insurance, car insurance, life insurance, dental insurance, cell phone insurance.
You ever get that question? What
Right.
happens if I don't die?
Well, good. We want you not. I don't want to die, right?
Yeah,
I mean, I can share my numbers, right? I mean, I don't want to go into those details, but I can afterwards on a one-on-one basis, right? If you want, but I don't want to die, right? I want to live as long as possible, but I have insurance just in case.
Right.
Right?
Another thing
Just-
too is like,
just in case.
sorry to cut you off.
No,
but-
go ahead.
So they try to sell you on whole life, which is also sold as like permanent insurance, right? And they say, yeah, the term ends, right? The term ends. And what if I don't die? I paid into this thing for 30 years. I don't get anything back. See, a lot of these companies, they don't teach you how to actually invest to build up money to where you don't need life insurance, to where you become what's called self-insured, right? Because let's say if I have a $500,000 policy right now because I just started a family, I just bought a house, my expenses are high, and I don't have a $500,000. So God forbid I pass away today, what am I leaving behind to my family? That's why you need life insurance. They don't show you that over the next 20 years, 30 years, how to build your accounts up to where you have $500,000 yourself. So now guess what? You don't need to pay the insurance company anymore. And I guess that's another thing you could look out for when you're looking for a financial professional.
That goes back to the first question.
Right, because we're not looking. They shouldn't be looking to try to lock you in for life, to keep having you pay into something for life. They should be showing you how to not need life insurance for your whole life. At least that's our opinion and our experience. But
Yeah. One of the go ahead,
Sorry.
go
So
ahead,
to add to that, like you said, one of the first questions is about what do you look for in a financial representative, right? A lot of the representatives that sell life insurance, they're not authorized or licensed
yeah, that's another thing too.
to offer investments, right? So they'll sell you investments bundled together in these type of policies, but they're not an investment, right? A whole life policy is not an investment account.
It's a savings plan.
It's a policy. It's a life insurance policy.
It's
There's
like
a
a car
policy.
insurance policy.
There's a policy number. There's no investment account number attached to that.
So
when
there's
you
no benefit for whole?
So now when you go in deeper, right? The whole life is usually more expensive, the premium, and you usually have a less face amount, the coverage amount, right? So if you let's say you have 100,000, right? Let's use 100,000 as the base.
Yeah.
Term insurance, you can get a higher face amount and pay less premium, right? It's usually lower premium because you're just paying for insurance. Whole life on one side, you're paying for insurance, you're paying for savings, there's fees associated with it, right? So there's a lot of, fine print in the paperwork. And it says it in the paperwork,
Yeah.
right? So it's just identifying how these plans really work. And that's what we do is to open up the booklet and say, look, this is where it says it at. Let me show you where the fine print says it at. Yeah. If you don't believe me, we can do a 3-way call.
Yeah.
This is important. This part I'm going to share with you right now is important. I can do a 3-way phone call, not to the representative that gave it to them, to the customer service line, and ask a key question. Ask this question. Call your life insurance company and say, if I pass away, do I get the face amount, the death benefit, and the cash value?
Answer is no.
The answer is
Most likely it's no.
Most traditional policies,
Right.
the answer is no.
Because there's usually like three options
Yeah.
in whole life policies.
Yeah.
There's one option where you get both. You get the death benefit. There's another option which is the coverage amount. There's another option where you get the actual savings only, not both. And then the third option is that you get both. But that third option is so expensive
Yep.
that they never actually sign up people for it.
Because they know this.
It's more money.
They're
You gotta
gonna
pay
take
more.
an L.
Right. So that's
I have to
the
pay
thing.
more money to get my money back. That like
Right.
like,
Yeah. So, but people don't realize that there's a lot of jargon, in the policies, and that's why you need a good professional to read through it and point it out, like literally highlight, hey, listen, this is the option you actually have. You think you're gonna get the 100,000, you're actually just gonna get whatever little bit of money you have saved in the savings portion of the policy. Yeah.
Two
And matter of
things.
fact, you guys had these policies when we first
The whole-
established you.
yeah.
I'm gonna add
Yeah.
something to that too.
Two
So-
things I realized when this happened with my mom's, right? You definitely do not get the cash value.
You do not.
You do not. I experienced
confirmed
that.
All right.
It
See,
happened.
yeah.
Yes.
Yeah.
I did.
Experience.
We did not, as a family, get the cash value, right? We got the policy, what'd you call it?
The death benefit, the face amount,
The face
the
amount.
coverage amount.
Yeah, the coverage
There's
amount.
different terms for that. Like you can say coverage, death benefit is
Right.
It was the
Same thing.
lesser
Yeah.
coverage amount.
Yeah, like
it
say
dropped down.
she had a cash value of 20,000, but the face amount was 100,000. You're not getting 120,000.
Right.
You're
Yeah.
getting the 100,000.
Yep.
So that cash you supposedly got
Gone.
only benefits you if you stay alive and maybe end your policy or change your policy.
Correct.
So, and then another thing I realized is that term ends. I didn't know that.
correct.
That's why I called you and I said, yo, how many years do I have left on my term life insurance policy?
Mm-hmm.
And, we got to work and we got another policy installed. But yeah, you do not get the cash value. So I just wanted to say that personally, I experienced that.
Right.
And
Usually.
we have articles,
Yeah.
third-party articles, videos, a lot of backing to prove this.
Yeah.
I'm very confident on how these policies work.
Yeah.
I've
Yeah.
read every company you can think of. It doesn't matter what company it is. It doesn't matter what type of policy it is, right? So, I mean, there's so much I can go into.
One thing I want to mention, I think this might piss a lot of people off.
That's your job, Malcolm.
Yeah. so during the first, I would say about 3 to 4 years on average, the savings amount, the savings portion of your premiums, they go directly to the agent that sold you the policy. Right?
What, for whole?
Yeah, for whole life. Yeah.
Any cash value life
Yeah.
insurance,
Yeah.
universal life insurance, variable life insurance, whole
Yeah.
life, anything that says cash value,
yeah.
there's different names for them. There's now the most popular one now going around social media, IUL, is called
Yeah,
Index
oh my
Universal Life Insurance.
Yeah.
Because now it's being tied into the index, which is like the New York Stock Exchange is an index.
They're just getting
S&P.
fancy.
Yeah.
The industry creates new names. There's something. There's so many names. I can keep going, right?
Yeah, it's a lot of shit.
But now going tie into that, the disclaimer is you got to structure the policy correctly. No one structures it correctly,
Yeah.
right? No one structures it correctly.
Yeah.
What you should structure correctly is buy term insurance, and you can open up a separate investment account to accumulate, right, potentially higher returns than inside of a life insurance policy.
Yeah.
And again, we can do the calculations and show you. Doesn't mean that's going to guarantee
Right.
future performance, but when you see the numbers, black and white, I don't have to be a financial guru. I don't have to use all this jargon to teach the simplicity of how these things work. And that's what our job is to do that with clients, to teach you, to simplify things for you.
All right, so here's another question before we move on, right? Term life insurance, right? What are they? 20 years, 10 years, you can make them however long you want.
Yeah, you could do 10 year, 20 year, 30 year.
So let's say, unfortunately, right, you don't know this like I did. And say 10 years went by. I didn't know that it expired. Do you get a call? Do you get an email? Do you get your life insurance expired? So you could go on believing your policy still exists.
That's possible.
Will they still be deducting the money every month?
Of course. I mean, a company's
Even
gonna,
after it expires?
Oh no! When the
Yeah,
policy's expired, they're not going to keep deducting money. It's already a contract is
Oh.
over, right?
But
It's like
they just don't tell you that it expired.
yeah, that's why
because it benefits.
It's the responsibility of the representative that sat down with you to follow up with you, right? To be in communication with you, to build a relationship with you. It's a long. It's not. That's unfortunately the industry, right? They'll sell you something and then I'm in and out. but there's no follow-up, right? And that's the difference of, from my experience in doing this, right? Why you've referred me to people that you know,
Right.
because I've kept a relationship. I'm in communication, and that's a big part of building a relationship in the financial industry, right? Because at the end of the day, that's what I would want someone to do with me, right? And or my mom or my grandparents, right? And that's the approach I've always taken, and I think that's the reason why I've seen success, because people feel that, right? I mean, I'm from New York. We're from New York, right? We know when someone is like, we gotta have that sixth sense, right? We can
Being
go
hustled.
We know this. We all have that sixth sense when someone is trying to get one on us, and when someone's genuinely trying to help people, right? So
Right.
hopefully you've gotten that feeling from me. But I know I'm open as much. I mean, and I've made mistakes too. Like, I'm not gonna say I'm here the financial guru. I'm not an expert, right? But I'm still learning too, right?
Yeah.
And we can all learn together. That's my point, right? We can learn from our mistakes. We can learn from things that are working, and we need to change the narrative, right? And now in our community of like, if you're succeeding, you need to share with me what you're doing that's working for you, right? If I'm doing something well, let me share it with you, right? Like no ego. Like we trying to all progress for our family, right?
Crabs, kid.
All right.
Crabs in a barrel.
We could go on this topic forever, bro.
Yeah.
Yeah,
for
no,
sure.
we could really get
Definitely.
crazy.
There's an age where you should get term life insurance. Like before you turn 50, you should definitely try and get term life insurance.
I mean, when
After
I-
50 is that age where premiums go up, and I guess insurance companies look at that age as a scary age.
You're getting closer and closer to death. So,
Yeah.
so
All
I
right.
mean, I feel like, as soon as I got licensed, I got my own policy, and I was 18 years old.
How long
so-
was your policy for?
Mine is 30.
30 years.
Yeah,
See?
because I'm younger.
Right.
So,
So
I'm
now
probably
let
gonna-
me ask you a question. So when you turn 49, you got to re-up, right? Before you turn 50, right?
yeah, but I'll just do that.
Okay, now what happens with that
do you
money
mean?
you put in
What do you mean?
for the 30 years?
Well, through the grace of God, I survived the last 30 years, so I didn't have to get a death benefit.
No, I'm saying that money you put in, now that it's expired. So
Yeah. Well,
No,
the same thing.
it's-
Oh, so that's what you're saying. So the same thing that happens when you pay into your car insurance.
Yeah, that
You
money
paid
is
it.
Just,
nothing.
Yeah,
Insurance is just for peace of mind.
you're
Right.
betting on yourself to
Just-
outlive it. The policy.
it's for just in case, because we know the date of our birth, right? But we don't know the date of our death. So it's just in case something happens. Like if I knew the day I was gonna die, I would buy $1 million policy the day before
Facts.
or an hour before, But we don't. So that's what you're paying for. You're paying for that peace of mind that God forbid something happens, it replaces your income.
So that's why you say with the term and a partial investment
Yeah.
for the 30 years for when you're young, when you could actually get your own policy
Right.
at 18.
And then think about this too, so if you get a 30 year, right? Over the course of that 30 years, your rep should have already spoken to you about building up your assets over that 30 years. So maybe around the 20-year mark, maybe you have more assets than you have insurance, or maybe you have the same amount. So you don't need it as much. You know what I mean?
Right.
If you want it,
Your
you can
kids are
keep
older,
it.
Your kids are working.
They're gone,
go
they're
less.
moved out,
Yeah,
maybe the
correct.
mortgage is paid off or
Correct.
about to be
You
paid
hope
off.
your kids move out.
Yeah, that's another story.
That's a different topic. But if
another-
you think about it, right? Would you pay for homeowners insurance if you don't have a house?
No.
Yeah.
Would you pay for car insurance if you don't have a car?
I see what you're getting at,
Right?
Huff.
Yeah.
So if you have assets, investments, wealth, $1 million, $2 million, whatever the number is, whatever your number is, right? Do you need life insurance if you have $2-3 million in your bank account?
Self-insured.
No, not really.
If
Now
you
you
die, you leave that money to your family.
Right.
However you want to structure that and leave that, allocated to your beneficiaries. But then at that point, if you have assets and you have money built up, if you want to get life insurance, you can have a little extra. That again, the scenarios are different per person, per family, but that's why we have to first assess where you at and where your goals are, right?
Yeah.
But they don't, some of these companies, they don't want you to have,
They don't want you to have the
they
information.
want you to have permanent insurance. They want you to keep paying $400 a month for, $500,000 or whatever the case may be. So,
All right.
So,
So
sorry, before we change to the next topic, right? I mean, if you think about it, if I was a insurance agent, quote unquote insurance agent, do you think that I would make more money on giving you a plan for $50 or for $500 a month?
Of course, 500.
500 forever.
Forever,
Yeah.
right? Which one do you think the company makes more profit on?
500.
Why do you think those policies are sold the most?
That's how much they make more money off of those.
So,
Yeah.
I mean, that's also part of it too.
Yeah.
all right. So many of us, right? I myself, very fortunate, right? I work for a company that has 401k, a pension, right? So what's going on right now is that the younger people coming up, a lot of these jobs, a lot of these employers are pulling those 401ks. They're not offering them pension. So what do you recommend for like people to achieve financial freedom without these benefits of 401k or pensions?
Great question. Again, it depends on the scenario, right? I mean, there's a lot of different investment options, different types of accounts. I would say this, when someone's working at their employer, take advantage of whatever the employer offers, if they do offer something.
Max out.
But, or I should say, and have something outside of your job independently, right? You don't want to just depend on one avenue to build wealth or reach financial independence, right? Simply because, from experience as well, when you have things through the setup of your job, you technically don't control it fully, right? The employer controls those benefits. So at any point, companies can eliminate certain benefits. They can stop them. They can put a hold on it. They can change companies. They don't have to consult with the employees, right? So even with the 401k account, technically speaking, an employee is technically a participant of the plan. You don't own the plan in general, right? I mean, you own your own account, obviously, right? But you want to take advantage of what you have in your job and have something outside of your job, so you can have a combination of two different things. That could be an IRA, traditional Roth IRAs. They could be, if you're a business owner, there's other accounts that you can set up, SEP IRAs. There's so many, right? But it's just, again, starting with the foundation and working our way up step by step. So, yeah, for sure. You should have both if you can, right? Again, assessing the situation, that's why we have to do an analysis and figure out where they're at financially, income, expenses, lifestyle, everything in between.
All right. That's why I asked that first question. Like, I'm starting from nowhere.
Yeah.
I got nothing, no savings.
Yeah.
Got kids. Now what's next? But another question is like, the company that I work for, my years are winding down of how long I got left being there, working there. Right? Now, I'm starting late in the game in all of this because I just got, this information since I met you. So now what do I do for my kids? Or how do I prepare myself for retirement? Because right now I'm still taking care of my kids, but if I retire, I can't take care of them the way I do.
Definitely.
So all right, so I got a 16-year-old. What should I tell a 16-year-old?
First thing is having the conversation.
Yeah.
Right? I mean, you can have us come in and sit down with.
Yeah, we don't even talk about death and life insurance. Like,
Yeah.
we don't even discuss that. That's crazy. It's definitely a part of life.
Yeah.
Yeah.
But, at 16, what do I tell my kid, what to do?
Well, I think when you have the conversation with whatever financial professional you're talking to, make sure you have them there with you. Because honestly, the space is not really that complicated, right? A lot of people try to make themselves sound smarter, but it can all be simplified. As a matter of fact, it's simple enough for a 16-year-old to understand.
To
right?
figure that out.
So if you have them with you, they'll get the same information that you're getting from the financial professional, right? And I think that's the best way to do it, because we could explain it to you, and then you can try to explain it to them. But us having more experience, we can explain it a little bit better to who are 16-year-old or whatever.
All right. So back to the original question.
Even at that age, you could set up accounts for them.
Yeah, that too.
Right.
Yeah.
You could set up an IRA for them, right? As a parent, and you can start as early as the child is born, right? Set up a retirement plan for them.
But they can't be covered. I mean, they can't have their own policy unless they're 18.
Well, now policy is life insurance. Now
life insurance.
Now we go back and forth, right? So you can have your own individual life insurance. Well, again, every state has different laws, right? So it depends on the state that you reside in. But usually what we recommend is that with children, you have children covered in your policy. Right? Not get their own individual policy, because it's going to cost you more money. You're trying to minimize your cost, your expenses, right? As a household. Mm-hmm. We want to maximize your expenses or your money into your investments, into building assets, right?
Also, the idea of why you would get insurance for your kid is just simply to pay for funeral costs. God forbid something happens to them.
Yeah.
You're not trying to profit off of the passing of your child. You know.
Pushing my kid near train
So
stations.
they're not generating any income. So it's like there's no
No.
income to replace with life insurance. There's no need to.
All right, forget my kids. Now I'm talking about my retirement. Like, what the hell I'm gonna do?
You
once I retire?
gotta do what you can over the next few years. I mean, that's what it comes down to. Like, all you could do is all you could do. You know, and you can only start from wherever you're starting from. Like this, it's only but so much you can do. You can't go back in time.
Yeah, I know.
So you take the information that you get and then you utilize it, and then honestly, you'd have to look at other options to try to increase your income.
faster.
There we go. Increase income.
And that's what it comes down to too. Sometimes, like, you know, we tell people certain things, but like you can only save but so much. You have expenses, you have debt.
Yeah.
You know, so $100 a month or $50 a month, it's a good starting point, and it's better to have that than to not have anything. But it might not be enough. So at that point, you got to increase your income.
See, like you would tell an 18-year-old, like, yo, you gotta plan for retirement. They're like, I'm 18.
Yeah.
Yeah, they're
thinking
not
that.
thinking.
Yeah, yeah.
I mean,
But-
but I was kind of weird.
Yeah.
Yeah.
So-
I'm like an anomaly.
If I just tell them that, that's just like, but what kind of numbers can I tell them if they put aside such and such here, put aside here, you know, then by the time they hit a certain age, okay, just like everything in this is 25 to 30 years and
Yeah.
certain thing. Okay, so if I'm 18 and what would you tell me at 18 that would have me set up in 25 to 30 years? What should I do?
You can start off as little as $50 a month. I mean, most companies are not going to sit down with you to set up an account for $50 a month. That's another topic, another discussion, separate, right? Yeah. But yeah, you got to go based on, like, let's say you give them allowance, or maybe they work around the house. I don't know. I mean, these are conversations depending on the scenario, right?
Yeah.
If they help out in the house, you give them a task, and you say, hey, I'm gonna give you $100 a month, but you got to put $50 into this account. Like maybe it's like a forced, right? And again, it's just having those conversations, engaging where they're at and what they're understanding, their comprehension of the concept of the topic, right? But you can start off an IRA with $50 a month.
Yep.
Now that's not gonna get you to $3 million. I mean, depending on your goals,
No.
right? But it doesn't matter. Like it's the goal.
Yeah.
The goal is to start somewhere, as Malcolm was saying.
Yeah.
To start somewhere, start where you at, right? So if your income allows you to save $50 a month, the most important part is to develop the financial habit
Yeah.
that you're saving every month.
Yeah.
That's the same $50, $500 a month, $1,000 a month. If it's invested, right? It's going to be invested to similar companies. You can still get the same returns if it's $50 a month or if it's $500 a month. It's just a matter of setting up the account, of getting in that habit of saving every month.
Yeah.
For people who don't know, explain Roth IRAs.
So
How do they work?
there's a traditional IRA, then there's a Roth IRA. The main difference is that Roth IRA is after tax money that you're putting into it. So let's say you got paid, you got your paycheck, it went direct deposit in your bank account, and then you took some of that money and put it into the Roth IRA because that money's been taxed already, right?
Okay.
The benefit of the Roth IRA is that it's going to grow tax deferred, meaning you don't pay taxes on it over the years, right? As you're accumulating that account. The huge benefit of it is when you go take the money out, it's tax free. Even the gains, right? So like let's say you put in $10,000 in that account for the duration that you had the account, but that 10,000 grew to 100,000 as an example. You don't pay any tax on the whole 100,000.
Take that out.
That's tax free.
At what age, though, can you take that out?
Well, 59 and a half is like the rule in the IRS. Like 59 and a half is the age. Like before that age, you're not supposed to touch any retirement money because it's a penalty. But there's certain things that you could take money out of it in certain cases, exceptions. Again, case by case scenario. But the rule is 59 and a half. Below that age, you're not supposed to touch any retirement account, 401k, IRAs, because it's money that's being used. You're putting away for the future, right?
Okay.
So that's what the goal is. But yeah, again, you could tap into some money depending on some exceptions.
Tax free.
For that Roth IRA, it is, yes.
Do you hear this? Tax free. It's for us. We don't use it.
Yeah, most
And
people.
we'll
a lot of
never
people don't have
benefit
it.
this.
Yeah.
Yeah.
So
I'll
this is
give
something
mine.
you could have started when your first child was born, right?
Yes, sir.
Like I've been at this company almost 30 years. If I'd have started a Roth IRA, I'd be able to take whatever.
You and I-
We'll do the calculations later.
Yeah,
you and I
definitely
both.
right?
You and I both.
Yeah. Yo, knowledge. Sometimes knowledge is very humbling and and it kind of angers you about the mistakes you made in life. But
Yeah.
it's all good. You got to pass them on to the kids and people that don't know. You know.
It's an accountability thing, man. So,
Yeah.
But that's why accountability is a big word, because that's what that's the approach I take, right? Like, I want to be accountable to you if you're my client, but I want you to hold me accountable too as your professional, right? And that's where the teamwork comes in together, right? To be able to hold each other accountable and you know, like, I even go to the extent of showing my personal accounts to show you the mistakes I've done. Like, again, that's all private information, right? I'm not gonna post it on social media, but like, if I have a relationship with you, I'm gonna say, look, this is what I did. This is when I opened the account. This is not that this is gonna happen with you. Not that this is gonna exactly what happened in my account is not gonna be the same thing in your account, but to teach you the concept, right? That's the approach that I take.
I got you.
Right.
Can you explain the term high cost of waiting? What does that
High
mean?
cost of waiting. So it just basically is the concept that the longer you take to start saving for retirement, the more money you leave on the table. Because $50 over the course of 30 years invested in the market is a lot more powerful than $50 over the course of 10 years in the market, right? If I started at 18 and I've been investing for the last 30 years, and you start at, you know,
Yesterday.
later on in life, well, yeah, yesterday, then you just missed out on so many years to invest.
Yeah.
You missed out on all the ups and downs in the markets. So that's really what it is. And maybe we have some examples of the difference.
I'll give you one. So if you were 27 years of age right now, and you started, well, for the next 40 years, right? So till age 67.
40 years.
40 years.
Okay.
40.
40.
Saving $214 per month.
which is $52. No, $53 a month.
Well, we all got
Yeah.
calculators.
That's gonna you'll have $1 million. The goal is to have $1 million. Let's just use that number. The goal is to have $1 million, right? If you started at age 27, you need to save $214 to reach $1 million.
For 40 years.
Yeah.
Wow. I could've
If you
did that.
waited 10 years, right? Life happened, whatever the scenario is, and you started at age 37, to reach $1 million, you need to save $546 a month.
That's
So you see the difference? The 214, it jumps to 546,
right.
right? If you waited to age 47, I'll stop here.
I mean, you might.
You're making me angry, Hav.
If you started at age 47, to reach $1 million in your account, you need to save $1,497, almost $1,500 a month. See the difference?
Yeah.
And that's the cost of waiting.
That's
The high cost.
That's
The
what that
high
means.
cost of waiting.
Yes.
Got it.
Yeah.
So wherever you're at, you have to just start, right? It doesn't matter what age you're at. The most important thing is to start and develop the habit of investing, of building wealth.
Let me tell you something about accountability, right? At the age of 27, I had $214 per month.
We all did. We all did.
I guarantee you I had that.
We all did. You know how many pairs of sneakers? I'm not gonna say the brand, because I'm not getting paid by them. But I'll reach out to them. But
I just
Yeah,
did
reach
the
out to
numbers
them.
with $214. Really, is only $102,720 out your pocket in the course of 40 years.
Yeah.
So
And I'll give you
100,000
$1
get you a mil. Yo, the math is wild, bro.
you know how many pairs of sneakers I bought in a month? The new release, waiting on the line.
Yeah,
Come on,
Yo, repeat that again. Repeat that again.
the numbers.
Yeah.
If my math is correct, even New York City public school, 102,000.
So $214 per month for 40 years
for
equals
40 years.
102,000.
Yes.
so that's how much you put in total.
Yeah.
Right.
Out of your pocket, cash out of your pocket.
Yeah.
So that's multiplied by 10. So you get $1 million roughly with that.
It's crazy.
That's insane.
Hey, man.
And it could potentially be, a little higher or a
Of
little
course.
lower depending on the actual interest rate that you gain.
It's a good number.
Yeah.
Yeah, I mean, again, you got to speak to an accountant. You
Yeah.
got to calculate interest, fees, performance. There's a lot of factors that go into the value of your account. But again, the education is that's the first step.
Yeah.
That's the first step. To understand how all those things work. And this is just
Tax free.
the Roth IRA.
Stress that part, man.
Tax free, guys.
The Roth
Tax free.
IRA.
So you be like, yo, give me my $1 million. Tax free.
The Roth IRA.
As opposed to 401k, you try to do anything with that.
Yeah.
Unless you do some kind of rollover stuff, you're going to get taxed.
Yeah, you get taxed.
The information is there. We don't use it.
Yeah.
We have the money. You know what? One thing that bothers me about our community, right? We like to throw around the word broke, low income. We don't have it. We're unfortunate. I don't know about you, but I see what cats are wearing. I see what people. I see where they shop. I see the Gucci store got lines.
Mm-hmm.
We got $214 a month, bro.
Yeah.
We got this,
Yeah.
but we're not using it. We can't complain about broke. Like, this is setting you up, your family up to retire. Like, you want to work till you're 75, 67?
It's that
I saw
instant.
my pops work to 65, bro. I don't want to do that, Hav. Where were you when I was 27?
It's all his fault, right? 'Cause
Damn, Hav.
Where was I when I was 27? Because I was in the industry,
Yeah.
right? And even in the beginning, you know, it could have been a different factors why I didn't really implement the concepts, because it took me some time to really like listen to my own advice. So like the things I was learning about finance. You know, even in the beginning, there was things I made mistakes on, right? It's like, but you got to make those mistakes to really learn sometimes, right?
Yeah.
But yeah, it goes back to why I started this business, why I'm in this industry, is because I think about my mom, I think about my grandmother, I think about my family, right?
Yeah, you kind of led me to my next question. So what is one of the biggest regrets you have financially?
Not starting sooner. That's for me.
Right.
For me, like, I remember when I was 19, 20 years old, I already had like 30,000 in credit card debt. It's crazy.
At 19?
Yeah. I was I had 2 jobs. I was always working a lot.
So
Like,
they
New
got
York-
you too, huh?
Yeah, you know. I was
Yeah,
swipe
you-
ins, pay later. Oh, cool. Yeah. Swipe.
Back at college, man.
No
College
worries.
dudes, you
I
walk-
get a free bag.
Yeah, I got a thermos,
T-shirts.
hats.
Okay.
So I had like, I mean, you saw my numbers when I showed it to you.
Yeah.
So that was my biggest mistake. Like just not, well, I guess the first thing is I didn't know, right? But then when I started learning, I really didn't implement it right away.
yeah.
You know, that took some time. And
Yeah. What about
So
you,
good.
Malcolm?
So mine is a little different. So I think my biggest mistake would be trying to help the people that I cared about more than
And
like
yourself.
yeah, because like I said, that the whole reason why I got involved in the business was to learn the concepts and to help my family. Even to this day, I'm very motivated by the way I can impact my family. It literally is what I think about when I make most of my decisions. So when certain family members were in certain situations, I had to take from myself to help them. And, you know, it just felt like it was important for me to do at the time. But as a result, it set me back a few years. And it took me some time to kind of recover from it.
Yeah.
So that's what I would say. I mean, it's kind of hard, right? Because you care about your people, but I think the important thing that I learned is that until you take care of yourself, you can't really take care of everybody else. Because everybody's just going to be messed up at that point.
that's a biblical term right there.
Yeah.
It sounds so like, all right, I get it, blah, 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 right? But it's the absolute truth, kid.
Yeah. It
hell
just is, yeah. Yeah.
What about you, O? I already know, but tell the people, I'm kidding.
My biggest mistake.
Or regrets, you know, whatever you want to share.
It's a mistake, but taking advantage of what was dealt to me that I knew, that's what angers me the most. It's not taking advantage of the 401k like I should have.
No.
They were telling me from day one to do this and do that. I gotta go get this car. Gotta go buy this watch, sneakers, like you say. Yeah, that's my biggest regret.
Yeah.
I've heard some people say, "Oh, I don't plan to be here that long, so I don't really want to open it up."
Yeah.
You should still open it up, even if you plan to be there a few months or a year. You know, it's a
Oh,
short-term job. Still
another-
set it Up.
Another thing that people think when you pointed that out to me, when you leave the job, that that 401k, you take stays with that company. That money, you could move that money with you, whatever you have invested in there.
That is an option. Yep, that is an option.
You don't have to leave it there, but some people leave the job and leave that there.
Yeah.
Yeah.
It's crazy.
Yeah, there was a lady, she retired, right? She told me the same thing, bro. She said, max out your 401k. I'm like, I ain't gonna be here that long. I want to be a rapper. You know what I'm saying? It's just a day job.
And a gangster.
Right? Bro, Flavor Savers. Shout out to Flavor Savers.
You got to flash the logo.
Right? Coincidentally, we were working on her block. She owned 2 brownstones, and she does real estate. She said, did you put all your money in your 401k? I was like, sure I did. I sure did. And just to see her, like years later, retired, does real estate, has 2 brownstones in Park Slope.
Anybody know the real estate business in Brooklyn?
She lives on
Park Slope?
Fifth Ave. Right now they tearing down the they tore down already the supermarket that was there, right? So she said nobody wanted to be caught dead on Fifth Ave, right? Like right leading up to the Barclays.
Yeah.
Oh, she's over there.
Yeah. She's like, nobody wanted to live there. She said, nah, they kept coming, knocking on my door. Yo, go buy your house, buy your house, buy it. She was like, nah. Now she rents it out, 2 brownstones, and does real estate. All because of 401k. So
That's a retirement plan, yeah. That's what it's there for.
So I would say that is probably one of my biggest regrets, not maxing out the 401k. Because you try to balance it, right? You look at it, you say, yo, 10% of your salary, I could do that. 16, hell no.
Yeah, that's
Right? But it's like, you could do it, son.
Yeah, because you're going to spend it anyway.
Yeah.
You're going to spend it anyway.
You could do it.
Yeah.
And what people don't realize too with 401ks, if you're in the bind, you borrow against your money,
Yes.
borrow the money you already have invested, and you pay yourself back.
Yeah.
And gaining more, it's still gaining interest. So you're not really losing anything.
Yeah.
Like the game is the game, man. It hasn't changed.
Nah, it has.
Just the people.
You just the discipline, the self-discipline to save your money.
But listen, you also too, as excellent as the father that we were raised, blessed with, I should say,
Mm-hmm.
he didn't have these conversations with us, and maybe he didn't know.
Right.
Maybe he wasn't informed. Because
Right.
look, Chico is well informed of everything, and so I knew everybody in here that know Chico. He's well knowledged, so he taught us everything that he knew. Some of it I'm like, oh man, I ain't paying attention to it. Now that I'm a grown man, I was like, damn, he was right again. He's been right every step of the damn fucking way, man.
Yeah, but you know, his job when he came to America is just for us to get education and a good job.
Yeah,
Like now, we know.
yeah.
So now we got to pass it down to our kids.
Thanks. Yeah.
Right? Naj, Jasmine, Isaiah, Toast, y'all better start listening, bro.
Those are all clients, bro.
Oh, those are all your clients?
Yeah, those are all clients.
Look at that. Yo,
They should
holla at
already
Malcolm.
know. They should already know what's up.
They do, but I don't want them to repeat the same things.
Yeah,
Well, that's
that
why.
I'm
That's
doing,
why
you know
the
what I'm saying?
follow up, staying in communication, reviewing, doing
Yeah,
annual
they
reviews.
said they haven't heard from you in 2 years.
Talking to me?
Yeah, they just text me.
That can't be possible.
They just text me, man.
Oh, they just text
We
you.
live streaming. They just
Oh, I
text
didn't,
me.
I didn't see the text come through.
All right, yo, Mark, I'm going to have a question for you, man.
All right.
Can you explain the psychological aspects of personal finance?
Yeah, so it's kind of like what we're talking about now. It's like, you know, you can know it, you can know what to do, but you don't do it. It's like, why? And, you know, sometimes it's because we weren't talked to, like our parents didn't talk to us about it. And the reason why they didn't talk to us about it, because they didn't know, because
They
their
didn't know.
parents didn't know, and so on and so forth. So that's kind of one of the biggest hurdles too, to kind of overcome. Because like through the grace of God, I was like, yo, I need to learn, right? I was like, I just felt like something I needed to learn. Had I not had that feeling, I don't know what I would have done. I don't know, you know?
I remember you were studying, man,
Yeah,
up all night.
I read a lot of
I
stuff.
thought you were doing something else, but obviously,
Yes.
obviously,
I don't know what that
You were
something else
getting
would be, but
you were getting your license, man. I'm proud of you, though, man. I am
Appreciate
proud of you, though, bro.
appreciate that.
I knew you since you was in your mother's stomach, bro. Look at you now.
That's a long time.
Doing your thing, man. Good
Appreciate
job, yo.
that.
And now you serving your country?
Yeah.
Yo, shout out to this man right
Ah,
here.
come
Yo.
on.
Lord.
Yeah, let's go.
Ah,
Shout out
Jesus
to Malcolm,
Christ.
yo.
Let's go.
Yes, sir.
And you did all of this without a father in your life, man.
Shots. Shots fired.
My father's alive and well. My father has almost 30 years
Yo, tell me who your father
in
is.
service. That's Rudy. Y'all should already know.
That sits right in your seat.
Yeah,
And what does he do?
he's in the service.
I'm
He's-
saying, what's his thing?
What do you
In the
mean?
beginning of the podcast.
Oh, he does the smash the button, right? Like and subscribe.
Yes, sir.
Yeah.
Good job, man.
Good times.
Yeah, man. Yo,
man.
nice having y'all here, man.
Pleasure having us, man. Appreciate being
it,
here.
man.
We gotta
before
extend this conversation though.
Yeah, did we miss anything? Is there anything? I know you could go on and
Yeah.
on, but
So the short answer is yes. We missed a lot.
you know, like, did we hit all the main points that
I think so.
think so?
We got,
We
some
got
minutes.
a lot of good stuff.
We got 7 minutes.
I just wanted to point out that like one of the biggest thing about the 401k is that you get that match, right? Well, hopefully your company gives you a match.
Yeah, some people match.
So that's like free money on the table. Like you're just missing out on free money if you don't take advantage of the match.
Yeah, thanks, Malcolm.
Yeah, you.
Thought I said that already, bro.
Nah, I don't think. You
No, it's
said
true
that.
though. It's that 401k. If you don't take advantage from the day you get hired,
Yeah.
Yeah.
for some
Yeah.
reason, like I don't know, the jobs that we're at the longest, when we get hired, we think we're not gonna be there for long.
That's because you don't want to be there. That's why.
Yeah, you don't want to. Sometimes you have a mindset. I'm not going to work for anybody. I'm going to work for myself.
Yeah, you hope that at some point you don't have to work there. That's what
What?
That's what you're thinking. Yeah.
Then you have a kid. Then 5 years go by. Then you have another one.
stuck.
Then 10 years go by. Then you're like, I'm already invested
Yeah, what I
in the
wanna
pension
do.
and 401k, so I'm here.
Might as well stay.
I mean,
Definitely pension.
I mean,
you want to remain in jobs that offer pension. You want to remain
yeah,
at that job as long as you can,
yeah.
Well, I'll say this.
for the most part.
Just because you have a pension doesn't mean that's going to stay the same
Yeah.
for the duration that you're working there. They
Yes.
can also change
Yeah. But
pension contracts and
Or they could take that away
Yeah, they could
anytime.
just take it away.
Oh, and I don't know if people know this, but like, so a lot of people talk about Social Security. That's probably going to be gone within the next few years. Like so the problem with Social Security is that there's more people taking away from Social Security than there are contributing to it. So like, I don't think that when I retire, I'm probably not going to get anything from Social Security.
It's probably
So
gonna
it's
be
like
80. It's probably gonna be 80 years old for you to collect Social Security.
Yeah, because they keep raising the age up.
yeah. So it's
Definitely
like
to
one
collect
less
that.
thing that you'll be able to lean on when it comes to your retirement.
I'll give you a number. Personal example. Someone that's about to take Social Security is turning 65 years old this year. And that number, if she takes Social Security, is like $2,600
Per month.
per month. Right? So think about it. The cost of living in New York, or even across the country,
I mean,
how much is that going to stretch you? Like, how much is rent in New York?
$2,600
Right?
for a studio.
For a studio, right?
Yeah.
Well, maybe one bedroom, right? So understand that. That's why when I said earlier about if you have something set up through your job, great. Have something set up outside of your job, even better. You have Social Security, okay, extra, let's see what that is. But you have to have a combination of different things.
Yep.
And having that conversation is the first step, right? Reaching out to somebody that you trust or somebody, like I work on a referral basis, right? So, you know, you referred me to different families that I've sat down with. I only sit down with people that refer me from a prior client that had a great experience, because then you can talk about your experience that you had with me and be honest, right? And give me feedback on that, like things I messed up or you know I didn't call you the last 6 months. You tell me, like, yo, what's up, Av? I haven't heard from you.
yeah.
My bad. And no, and we'll be in communication. But that's the point of like having the information. But going back to what Malcolm said, taking action. Like there's so much resources out there, so many videos, so many articles. But then because there's an overload, you know, it could be overwhelming, right? And then we don't know who to go to or to sit down with, and we get lost in the mix, right?
Yeah.
So it's going down to the fundamentals first, learning the fundamentals first, having a basic plan first, and then exploring other things, right? Because there's a lot of different things you can do, right? But it's having the foundation set up, and that's where we come in.
Yep.
After speaking with you, I spoke to Dirk, and Dirk, it raised a lot of questions with him and his policy. So I hope you got those questions answered that day, my brother.
Cool. Cool, man. Yeah. Sounds good.
Yeah. I did call you a lot, though. Definitely, I changed the password at least 10 times, bro, because I kept forgetting them shits.
Yeah, we got to go over some stuff.
I was like, Hav,
But even that,
password again.
even that part right there, like, look, you said you called me a couple times. Where did you call me? My cell phone number.
Yeah.
Right.
You text me, right? My direct number, not an 800 number.
Mm-hmm.
That's the value that we provide. You know what I mean? Like, and
Give me a beeper number, man.
all right, I don't know about that. I don't
beeper.
know about that,
Gotta
man.
give me a beeper number, man.
Hey, what's that?
Can't be
What's a
1-800
beeper?
hustle.
But
Two-way pager.
that's the point we're trying to get to is like, you know, having access. I want to have access, right?
Yeah.
And there's things I still don't have access to, but I know I'm gonna get that too, right?
Yeah.
So that's what the long-term game.
Yeah.
Again, going back to the game, coaching people through that process, right? We're talking about games and sports, coaching people through finance and money and like these conversations. So
Yeah, sports is fun. I know we sit here, we talk about it, we get on each other about our teams, but the real importance is the money game, our own money, because these athletes are set, right? The same athletes we criticize and comment on and clown, they're set, bro. They got $200 million contracts.
Yeah.
We're the average workers working 9 to 5, trying to
Trying to attain
get
something.
financial freedom at the end of this thing.
Yeah.
So I know, we have fun here, but this is our game that we have to play the correct way. I want to thank y'all for coming, man.
appreciate you, man.
Thank you for having us.
me.
Thanks for being here. Coming to the podcast. Thanks for being here.
I'll go with that one, sir. Yeah, I want to thank y'all for being here today, man. Thank you, Javier Guzman.
My pleasure, man.
And Malcolm Howard, man.
No problem. Anytime.
Yo, we got to talk about this some more.
Yeah, we got-
Sportsmanlike podcast. We got to go.
We got. I got more questions, man.
Yeah, I got 100 questions.
I got more questions than answers. I got, man.
All right, y'all. Peace, man.
Yo, peace.
Sportsmanlike conduct.